Welcome to TalkTickers. We dive deep into earnings calls to pull out the insights you really need.
That's right.
Today, we're breaking down the latest call. We'll cut through the jargon, get you the key financials, and, what management sees coming down the road.
And this quarter, well, it really shows some strong momentum, doesn't it?
Seems like it.
It's the fourth quarter in a row they've reported growth in sales, adjusted operating income, and adjusted EPS.
It's pretty consistent. Absolutely. And that adjusted operating income number, a 27% jump year over year. That's significant.
It is. And the margin expanded, too, by 70 basis points.
Right. And then adjusted earnings per share up 48%. Really impressive stuff.
Yeah, quite a surge.
So what's driving this? Is it across the board or specific areas?
Well, it's pretty broad, actually. You've got chicken, pork, prepared foods, all showing year-over-year growth in adjusted OI.
Okay.
And their international division in the other category, too. Beef did face some pressure, some headwinds there.
We'll get into that, I'm sure.
Yeah, but overall, the results look strong.
Yeah.
And importantly, they improved their net leverage ratio compared to last year.
Okay, so solid top-line numbers. Let's dig into the segments then. Prepared foods seems like a good place to start. Sound like a real highlight.
It really is. Prepared foods delivered double-digit margins again.
Again, yeah.
And expanded them, actually, by 50 basis points year over year.
What's behind that performance? Is it just sales or?
It's more than just sales. They're really focusing on the operational side. They've got these new tools now.
Oh, yeah. What kind of tools?
Giving them really granular visibility, like down to the specific production line, the specific process.
Okay, so really detailed data.
Exactly. And it's translating into real gains. They're talking 250 basis points improvement in line efficiencies.
Wow.
And get this, 280 basis points in labor efficiencies.
That's huge. Those kinds of improvements really stick.
They really impact the bottom line, yeah.
Yeah.
And it's not just cost cutting either.
Right. Innovation's still key.
Absolutely. They mentioned that Jimmy Dean Chicken Biscuits won an award.
I saw that.
And new stuff too, like chicken, egg, and cheese biscuits. Plus, they're expanding the right brand into smoked sausage.
Interesting move.
And the Hillshire Farm snacking stuff keeps growing too. So it's a few different things driving it.
And the outlook there, management sounds pretty positive.
They do. They mentioned potential for prepared foods to get, north of a 10% return on sales in the future.
So they see more runway there.
Definitely suggests that. Okay, maybe we should shift over to chicken now. Also looked like a strong quarter.
Yeah, let's do that. Best Q2 adjusted operating income in 9 years, I read. That's quite a statement.
It is. Nearly double what it was last year.
And volume growth, too.
Second quarter in a row for volume growth, yeah. Sales up 2%.
What's driving chicken?
Seems like a mix. Strong execution on the operations side, definitely. But also lower grain costs helping out.
That's a nice tailwind to have.
Sure. And they highlighted order fill rates, best in years. Over 98% for 2 quarters straight.
That consistency must be great for customer relationships.
Absolutely. And they did mention that focusing on those long-term relationships, plus their innovation pipeline seems to be working well.
Okay. So strong performance, but what about the guidance? They reaffirmed it, right?
They did reaffirm the full year guidance, but they also mentioned some planned investments for the second half of the year.
Ah, okay. Investing some of that gain.
Seems like it. To strengthen their position in retail and food service. Also talking about diversified pricing models linked to grain markets.
Smart. Hedging their bets a bit.
Yeah, and just factoring in the overall macro environment too. So confidence, but also caution.
Right. Acknowledging the strength, but planning ahead. Okay, let's tackle beef. Sounds like that's where the challenges are.
Yeah, beef is definitely trickier right now. The big issue is limited cattle availability.
Right, the herd size.
Exactly. That's putting pressure on spreads, the margin between their costs and selling price.
But demand is holding up.
Surprisingly, yes. Consumer demand seems pretty resilient. Sales actually increased, but that was driven by higher average prices.
Interesting. So people are still paying more for beef. How's the company managing the supply side then?
Focuses on cost management, obviously, and trying to enhance the mix, shift towards more value-added products.
Which usually have better margins.
Typically, yes. They also mentioned they think the bottom of the cattle liquidation might be near.
Oh, really? Any signs that?
They pointed to decreases in beef cattle harvest and fewer heifers on feed. So maybe, just maybe, supply starts to stabilize or even tighten further down the road.
Okay, something to watch.
And demand-wise, supported by strength in like middle meat, steaks, and roasts, and resilience in ground beef too.
Got it. So pressure on supply, but demand is sticky. Let's switch to pork. How did that segment do?
Pork had a great quarter. Best Q2 adjusted operating income in 3 years.
Nice jump there too, up 67%.
Yep, 67%. Really shows the progress they've made operationally there.
What's driving the pork improvement? Similar factors.
It's operational improvements again. Plus, they're getting momentum in that value-added mix, similar to beef, which helps offset tighter commodity spreads.
Makes sense.
And they're seeing healthy demand pretty much across the board in pork. Cost discipline, better utilization. It's all contributing.
Sounds like the optimization efforts are really bearing fruit in pork.
Seems that way.
Now, they also talked about something bigger picture, optimizing their logistics network. Sounds like a major project.
It is, yeah. A big strategic move. They're planning to sell off multiple smaller, older, cold storage warehouses.
Okay, and replace them.
Exactly. Transitioning to several large-scale, fully automated, next-gen facilities, they'll be an anchor partner in these new sites.
Automation. Sounds expensive, but potentially very efficient.
That's the idea. Reduce complexity, streamline inventory flow, simplify processes.
And the financial impact, what are they expecting?
Well, first, gross proceeds from selling the old ones may be $250 to $300 million.
Okay, some cash up front.
But the bigger prize is the ongoing savings. They think the new network could generate around $200 million in annual savings once it's fully up and running.
$200 million a year. That's substantial. When do they expect that?
Currently projected for around 2030. It's a long-term play. And it'll mostly impact poultry and prepared foods.
Right. The higher growth, higher margin areas, potentially getting more efficient. Makes sense.
Yeah.
They also mentioned something about product standards. Dyes, was it?
Oh, right. Yeah, they're proactively removing petroleum-based synthetic dyes from their retail branded stuff.
Ahead of any mandates.
Yeah, they expect to be done by the end of May, which is ahead of the HHS timeline. Shows they're listening to consumers, maybe anticipating regulations.
Good proactive move. Okay, let's zoom back out. Overall financial health outlook. How's that looking?
So enterprise sales were $13.1 billion. But important note, that includes a legal contingency accrual. Without that, sales would have actually grown year over year.
Ah, okay. Good context. Cash flow.
Year-to-date operating cash flow, pretty healthy at $846 million. Capital expenditures were $464 million, so free cash flow landed at $382 million.
And what are they doing with that free cash? Paying down debt, dividends.
Dividends are key. They paid out $349 million year-to-date. And they reiterated that's the primary way they plan to return cash to shareholders.
Sticking to the dividend commitment, balance sheet.
Looks solid. Net leverage is down to 2.3 times. And they have $3.2 billion in liquidity. Pretty comfortable position.
And the outlook.
Yeah.
They reaffirmed guidance for fiscal 25, really.
They did. Kept it unchanged.
Yeah.
Sales flat to up 1% year over year.
Okay.
Adjusted operating income, the range is $1.9 to $2.3 billion.
Still a decent range.
Yeah. And they gave numbers for interest expense, tax rate, CapEx, about $1 to $1.2 billion there, and free cash flow projection of $1 to $1.6 billion.
And this guidance considers potential headwinds.
Yes, they specifically mentioned factoring in potential tariff impacts and ongoing consumer pressure.
Good to know they're baking that in. What about the international business? You mentioned earlier it did well.
It did exceptionally well, actually. Strongest quarter on record for their international operations. Big improvement year over year.
Wow. What drove that?
Mostly improved operational fundamentals, getting the basics right, plus their commercial strategy seems to be working.
Sustainable, do they think?
They expect continued favorable performance, but they did add the caveat about the broader macro environment potentially having an impact. Standard caution.
Sure. Okay, so pulling it all together then, what's the big picture context for someone listening, maybe an investor, after hearing all this?
I think the main theme is solid operational execution across a diverse business. You see strength in chicken and pork offsetting those pressures in beef. That diversification is working.
Right, the model's showing its resilience.
Exactly. And these big strategic moves like the logistics optimization, that's not just about next quarter. That's a long-term play for efficiency and cost savings.
Especially for poultry and prepared foods where it seems the focus is.
Precisely. Add in the commitment to the dividend, the fact they reaffirmed guidance despite uncertainties. It paints a picture of a company managing a complex environment pretty effectively.
Okay, makes sense. Now, let's shift gears slightly. Time for our segment where we brainstorm some, let's say, speculative ideas based on the call. This is definitely not financial advice, folks.
Absolutely not. Just thinking out loud.
So what's an outrageous but plausible trade idea that springs to mind from this deep dive?
Okay, here's one thought, playing on that prepared food strength we talked about. Management seems really bullish, right? Double-digit margins, potential for north of 10% ROS, innovation pipeline.
Yeah, lots of positive signals there.
So the idea could be a long position in companies, maybe not just this one, but others too, that have really strong branded prepared food portfolios, especially those focusing on convenience, protein, and showing they can innovate and operate efficiently.
The prepared foods premium play, perhaps? Something like that. The thesis is that consumer demand for convenient, value-added meals keeps growing, and these companies can capture both sales growth and margin expansion.
Okay, makes sense.
Yeah.
Any hedge or counterplay to consider?
Well, to make it a bit more interesting, you could potentially pair that long position with a short position in companies that are, let's say, overly reliant on basic commodity meat processing.
The ones maybe facing more direct pressure from input costs and less pricing power.
Exactly. You're playing the potential divergence value-added prepared foods versus pure commodity exposure. Again, purely speculative, outrageous, but plausible.
Got it. An interesting angle, focusing on that value-add differentiation. Okay, so to wrap up our deep dive today, this earnings call, it really shows a company navigating, well, a pretty mixed landscape, but executing strongly in key segments.
Yeah, chicken and pork looking good, prepared foods showing real promise, even with the challenges in beef.
And those strategic initiatives, logistics, product standards, they point towards a focus on long-term value, not just the next quarter. Right. While there are definitely still challenges, the overall direction seems positive, suggesting continued growth and profitability could be on the cards.
But as always, this is just our take on the call. It's crucial you do your own homework, your own research before making any decisions.
Absolutely. What stood out most to you as you listened? We definitely encourage you to dig deeper into those areas yourself.